Hey YouTube, how is it going today? Well, in this video, I just want to touch base on some of the leisure stocks and the airline stocks in particular. I'm seeing something very interesting happening in this sector, and I want to share it with you guys. And then after that, of course, I want to get into some very nice looking penny stocks that I see that could be moving up soon. Well, there was some news in this sector over the weekend, and it was brought to my attention by the guys in the Patreon group, so I want to touch on that first. But basically, a United Airlines plane was leaving Denver towards Honolulu, and it suffered a engine failure, and the engine came apart and the debris fell down onto the town of Broomfield just outside of Denver. And United Airlines has decided to ground those aircraft. In this article, it says United Airlines announced Sunday they will be grounding 24 Boeing 777 aircraft powered by the Pratt & Whitney 4000 series engines, the same engine involved in Saturday's incident over the Denver suburb of Broomfield. The Boeing 777-200 headed towards Honolulu experienced a right engine failure shortly after takeoff. The plane turned around and returned to Denver International Airport, landing safely. The failure caused the engine's inlet and cowling to separate, raining debris onto a wide area of Broomfield. And miraculously, nobody on board or the ground was injured. The airline, which currently has 52 of these aircraft in its fleet, 24 active and 28 in storage, said the move to remove the Boeing 777s from its schedule comes out of an abundance of caution. United Airlines is the only U.S. operator with this type of engine in its fleet, and that's probably why it's not spilling over into some of the other airline stocks. But it also says United is not alone. Japan's Transport Ministry instructed Japan Airlines and all Nippon Airways, which operate aircraft equipped with the same series of engines, to ground the Boeing 777s in their fleet. Well, before I get to the airline stocks, I do want to touch base on the market, and I'm just going to take a look at the market ETFs at the moment. So we're going to start with the QQQ. If we zoom in a little bit, we can see that the QQQs are well below the 21 period and the 8 period exponential moving average. It's gapping down below the low on Thursday, which from a technical perspective is very damaging, and you can see that we are having follow through at the moment. The QQQs are down 2% right now, so it's well on its way to another distribution day. So the market is definitely under some pressure here. But the NASDAQ is definitely the weakest of the three. If we jump over and take a look at the SPY, you can see the SPY is not down as much, and it's holding its lows pretty well. It was up just a little bit off the lows, but now it looks like it has pulled all the way back. It is still above the 21 period exponential moving average, which of course is a good sign, and it is still well above the 50 period simple moving average, which of course is also a good sign. And if we take a look at the diamonds, which is the DAL, we can see the DAL is actually performing quite well compared to those other ones, and especially compared to the NASDAQ. And what that tells us is this is rotation that is going from the more riskier stocks into some of the better quality stocks that are in the Dow, which stocks like 3M and et cetera, that pay a good dividend. They're going to be rock solid. So if the economy starts getting weaker, these ones are probably going to do better than some of the more speculative stocks that we have in the NASDAQ. So we're starting to see a little bit of that rotation, and some of these Dow stocks are probably going to be stronger in the next several weeks unless something changes in what's happening right now. So I just wanted to point that out, that there's a little bit of a flight to safety, I guess you could call it. I mean, it's still sort of a risk on trade because you are in stocks, but the Dow stocks certainly are safer than the NASDAQ stocks. But I just want to point that out real quick. Let's get to the airline stocks. All right, well, let's get to the airlines. And of course, first one I want to talk about is United Airlines, because that one was in the news. And let's see how it is digesting that news. And as we can see, It's not digesting it too bad at all. It is up almost 5.5% as I'm recording this video. It is challenging the old highs from early December and looks like it's going to break out and probably keep going. If we zoom in just a little bit, we can see that the average is already at its average daily volume. And the trading day is probably only about halfway done, so this bar is definitely going to be much larger before the day is over. So it's busting out on pretty decent volume. So United Airlines is shaking off that news like it never even happened. And we're going to see that same theme with some of the rest of the airlines. Let's go to American Airlines. American Airlines is threatening the old high from January, and it is up on very big volume. It's actually up almost 10% on the day. So the airlines are very strong, and what this is telling us is that the market is looking ahead probably another year or two or three, saying that this pandemic is probably in the rear view. Most of the worst of it is probably behind us, and these stocks are probably going to be doing quite well in another 2 or 3 years, and they're trying to build up their positions right now. Another one we want to look at is Save. This is Spirit Airlines, and Spirit is super strong. This is definitely one of the better performing airlines at the moment. So if you do get a pullback in a stock like this, it's a little extended right now, but if you get a pullback in a stock like this, that's probably the one you want to jump on because it is one of the stronger ones. Another one that I want to take a look at is MESA, and I actually considered taking a position in MESA when it was at the 50-period simple moving average a few weeks ago, and obviously that would have been a fantastic move. I think MESA is one of the better looking fundamental airlines out there. Definitely one of the better balance sheets, and the market realizes that as well because they have been jumping on this one hand over fist. Another one I want to take a look at is LUV, and LUV at the moment is probably making the nicest pattern. Let me zoom in a little closer here. We can see they had the sharp move up, started moving sideways until the 8-period exponential moving average caught up to it, and now it's giving it that slingshot move up to a new high. So LUV is right at a good buy area right now because chances are this move is going to continue higher. It is already a little bit extended, but it didn't really pull back too much. So that's showing you that there's plenty of strength left in this stock. And once that moving average caught up, boom, just shot it up to a new high. So LUV, in my opinion, is a pretty decent buying opportunity as I'm speaking right now. Another one I want to go over is SkyWest. SkyWest has been super strong. So these ones that are the strongest, when we do get a pullback in these stocks, these are probably the ones you want to look to be accumulating because the chances are, if they're strong, if they're the strongest now, once the market turns back up after a pullback, they're probably going to continue to be the strongest. Another one I want to talk about is Alaska Air Group. Alaska Air Group has been strong as well. Had a nice consolidation from November all the way to February, and now it's busting out to new highs, and it is not looking back. Now, another one I want to show you that should be of interest is Boeing, because the Boeings were the ones that were grounded. And Boeing is shaking off that news as well. It's breaking above a recent high. So, I mean, this thing is probably going to be heading higher in the next couple of days and weeks because it's a very strong candle. As long as it continues to have a nice looking candle like this into the end of the day, it just is going to lead us to believe that we have higher prices coming for Boeing. So they are all kind of shaking this off. Let me show you a couple more leisure type stocks that were affected by COVID. We have Disney that is super strong. Of course, once the theme parks get opened back up and once the cruise lines get opened back up to full capacity, you can't help but think that Disney's not going to be doing a heck of a lot better. And speaking of cruise lines, let's take a look at them real quick. I mean, look how strong Carnival Cruise Line is right now, up 8% on a very big down day. I mean, that is showing you how much people are piling into these leisure stocks that were beaten down because they want to get in front of the potential economic recovery. Another one, of course, is Royal Cruise Line. That one is up over 10% at the moment. So these things are super strong. Let's just take a look at Norwegian while we're here. NCLH. Same story with Norwegian Cruise Lines, making a nice rounding bottom and is busting out towards new highs. up 8% at the moment. Let me do just a couple more leisure stocks real quick before I get into some of the other nice looking penny stocks. We can see Wynn Resorts busting out to a new high on a big down day. Let's stick with that theme. Let's check out MGM. MGM, same story. Nice move up a couple of weeks ago, stayed right at the highs, and now the 8-period exponential moving average is giving it a nice slingshot up. That's why I love this moving average. I love to buy the pullbacks into it, and I love to buy this candle right here, because once you get a hold of that moving average, and then one of these bullish candles, you tend to get follow through like we're getting today. Let me check out Las Vegas Sands. Yep, same story with Las Vegas Sands. Let's check out Marriott. Marriott Vacations Worldwide busting out to a new high. So I mean, you guys can see the theme that's going on. If the market does continue to pull back, I would kind of expect this sector to also remain strong. Just for that reason, I was telling you before, I think people are going to be looking to get their positions going in some of these leisure type stocks because they probably will be decent performing stocks in the next couple of years to come. But let's get into some of those good looking penny stocks. All right, guys. Well, the first one I want to get into is ICD, Independence Contract Drilling there in the oil and gas sector. And I've been talking about this for, probably at least a couple of weeks now, saying that I'm seeing a lot of strength in these oil and gas stocks. And I think that is going to continue because even though the market is down, these ones are still holding up quite well. And actually, ICD is moving out to a new high, up another 11% as we speak. This one is a little extended, so I don't know if I would be jumping into it just yet, but if it does pull back, I think this is a very nice looking chart pattern, made a perfect rounding bottom and is starting to accelerate to the upside. But I'm definitely seeing this theme in some of the commodity type plays. I think these commodity type penny stocks are going to be the ones that outperform if the market continues doing what it's doing right now, as some of those other sectors, some of those more speculative sectors are getting hit hard. But I do think oil and gas and some of the other commodity type stocks are going to be doing quite well during this rotation out of some of these more speculative issues, especially if it continues to be a bigger rotation out of those. But the next one I want to show you is also one that I do own, which is HNRG. And this one was actually near the high of the day when I put it on my list for the video. It's pulling back just a little bit, but it is still a very, very strong looking pattern, still a ton of volume continuing to pour into the stock, and it's holding that 8-period exponential moving average. So in my opinion, these are the type of pullback moves you want to be buying, ones that are still holding above the 8-period exponential moving average, and they are stocks that have been in long uptrends, or I should say in the beginning parts of an uptrend that could end up being a long uptrend. And HNRG is in the coal sector, so I definitely think coal should outperform the average market because I think the commodities should do well. Another one I want to show you that is having a decent pullback and is holding up well is CEI. CEI pulled back to this 8-period exponential moving average, and it is holding it again today. So this one is closer to a buy zone. Another oil and gas stock that is performing really well right now is REI. If we look at REI, it is holding those highs and just starting to move off that 8-period exponential moving average. So REI is one that I like. This is the point of the chart that I really like to buy stocks. Pull back to that 8-period exponential moving average after holding the highs, and then you are getting a move up off of it once the 8-period exponential moving average catches up to it. Now, when the 8-period moving average catches up to the stock, it doesn't necessarily have to be the floor, but if it continues to hold right at that level, and then you get that nice bullish candle like we're getting today, same difference as far as I'm concerned. I usually don't see any fall off as far as buy signals when this type of little move happens here. It breaks below that 8-period exponential moving average just for a day or so, but gets right back above it. As far as I'm concerned, same thing as holding it, as long as it jumps right back above it within a day or so. The next one I want to get into is HUSA. HUSA is actually holding the 21 period exponential moving average. As you can see, it does that in the past. Gets above the 8 period and it just kind of holds right in between those two averages before it makes its next move up. And I think that HUSA is definitely going to be making another move up because it's holding those moving averages just fine, and those moving averages are moving up. So chances are this is going to give it another move up over $3 pretty soon, I would guess. That's just my opinion, but it's a very nice looking chart pattern. Next one I want to talk about is WTI. Surprise, surprise, another oil and gas stock that is making a very nice looking chart pattern, holding that 8-period exponential moving average, and it is giving it that nice slingshot move up into almost new high ground. It's just about there, but WTI is definitely a fantastic looking chart pattern at the moment. Nice breakout from that triangle consolidation, and it is following through to the upside. Last one I want to get into is TOPS. We can see that some of these shipping and ports stocks are still holding up quite well, all things considered. This is a huge move up, and the fact that it's not pulling all the way back down towards the 200-period simple moving average shows you the strength that is still in it. I would like to see it consolidate a little bit more sideways. I would probably consider buying it into it a little bit more strongly if it did that, but TOPS is definitely super strong, so I definitely wanted to show you that one as well. All right, guys, well, that's all I have for this video, so I'm going to end it right there. But if you have any questions about any of these stocks, or if you have any other stocks you want me to take a look at, please leave them down there in the comment section. I will get to them as soon as I can. If you enjoyed the video, please hit the like button for the YouTube algorithm and subscribe to the channel if you haven't already. Thank you so much for watching my video all the way to the end, guys, and until next time, take care.